You figured out that other people's money is the way that everyone does real estate, and that is the secret to fix and flipping mini houses. And then you went out and bought an ugly home?
I did. Yeah, I bought a bunch. We just went on a roll. We just kept buying.
Mm-hmm.
We bought a bunch. We were buying probably one or two a month.
Mm-hmm. Nice.
Our crews couldn't keep up, really.
Mm-hmm.
So we had to start subcontracting it out.
Wow. All right, ladies and gentlemen, welcome to the Passive Cash Flow Podcast. We have an amazing guest today. I've known him for some good times here. Joey Chan. How are we doing today, Joey?
Good. How you doing, Aaron? Thanks for having me here.
Excellent, my friend. Excellent. And thank you, our listeners, for joining us here today on the Passive Cash Flow Podcast, hosted by People's Capital Group. I'm your host, Aaron Fragnito, and we're going to talk to Joey today about his construction side of his business. Joey specializes in construction and raising capital and flipping houses. And flipping houses is a crazy part of the business filled with lots of challenges. So he's cracked the code of how to do that the right way. I know we usually are talking about apartment buildings or raising capital or IRAs, but today we're going to talk about construction and flipping houses. So Joey, how did you get started in real estate?
Well, Aaron, I got started back in 2008. The first house I did, actually, I was since I've been a contractor for the past 17 years. So back in 2008, I was just in it for about 5 years at that time, and I thought I knew everything at that time too. And so I bought a house actually on a sheriff's sale for the first time, and I was gonna make this little. It was a little ranch, and I was gonna make this little ranch into like a little McMansion.
Mm.
But because I realized, you know what, this is a really bad time to do this, because the market had just crashed and everything else. So I said, instead of doing that, we decided to make it a rental. So we made it a single family rental, and we held on to it for about 3 years. And then I split up with my then partner, and because we actually owned a small lumber yard at the time.
Wow.
And that lumber yard, I lost tons of money on that lumber yard. And so that's why we basically decided, hey, we're going to split up and we're going to liquidate everything we own.
Lumber Liquidators. So you own Lumber Liquidators.
That's right. But
that's a great company to own. Congratulations.
Yeah. Wish I bought some.
Yeah.
But so that's how I got started into the whole buying houses and things like that. And so about 3 years ago, I got more into the fix and flip game.
Okay.
The way I kind of got into that was I kind of discovered hard money. Because back in 2008, I didn't know anything about hard money. Didn't even know it existed. Had no like formal education on what hard money was or anything. And so I went to like a whole weekend event, listened to the seminar. But that was a few years earlier, but so I was always looking for deals, and then never found a deal. Finally, I decided, you know what, I'm going to give partnership a try again. So, I partnered up with a partner, and we kind of went and did a deal together. We flipped a house in Bloomfield. It actually went well. We both made money. And I was like, wow, this is not as hard as I thought. We went from close to close in about a little more than 6 months. It was about 6.5 months. So that's pretty good, and I made some money, and I kind of got addicted. I was like, wow, I'm doing this for other people. And the biggest thing was I didn't figure out the financing. That was the big key.
Right.
So in that my unofficial first deal, I put in my own money. So I saved up my money, put it in, after that, I kind of figured it out. And I said, you know what? I got to raise private capital, because I talked to a lot of other people and they said, I always said, hey, how do you do this 100% financing thing? Like, what is that all about? Like, how do you do that?
Mm-hmm.
And everybody, the way they kind of tell you, right? It's actually a very easy formula that people don't even tell you. The 100% just means that you're using other people's money.
Sure.
Right?
OPM.
Exactly. That's all it is.
Mm-hmm.
And so the way we kind of do that with the hard money is we just get we get oh my God, private money. That's it, so we combine private money with the hard money.
Right.
And there's your 100%. Actually, it's not even, it's more than 100. We actually get probably, I would say, about 120%.
Yeah, because you got closing costs, you got operating costs, you got holding costs, right? So absolutely. And that's a great way to fund fix and flips. And that's how we funded fix and flips in so many different ways. We've done hard money with an equity partner, which you're talking about. So with a hard money loan, you need to come up with about 20% down generally. And, hard money lenders will give you maybe, even 90%, sometimes 10% down, right? And generally, the less you put down, the higher the rate is. And then they tend to give you about 100% of the construction costs, granted it appraises properly with the after repair value appraisal. And then the equity partner might own, 20% or whatever it is you need to give them for them to make the proper return on investment. So we've done it that way. Now we actually fund our fix and flips through private investors that bring in about 110% of the property, the renovation and the property, and then that covers our closing costs as well and our holding costs. And then we actually structure it so the interest payments accrue, so we don't have to make monthly interest payments, which are nice. Now it is a 1-year loan, so we got to get it done in a year, which is always the goal with a fix and flip. Really need it done in 6 months, but that's good because it allows us to bring in all the capital from one source. But it's taken years to develop that, and he's in a first lien position, gets a 10% plus 1 point on his investment. So he makes a good return on investment for the private investor there. And we've done millions of dollars worth of investments with him. So he's comfortable moving forward on the properties. And we have a couple accredited, large scale investors that do that. But what you're explaining is also a great way to do flips, and you have the equity partner who owns a certain amount of equity that brings in all the operating cash, and then you use the hard money lender as the majority of the cash you need to buy and renovate, and they're going to be in a first lien position. That hard money lender, the equity partner does not have a lien position, ideally, right?
Correct.
Exactly. They own equity, and that's how they make their cash flow or their return on investment, and that's how they protect themselves as well. Similar to an equity position when we buy an apartment building like the one you see behind here. And all right, so that was so now you're at the point where you're raising capital. You figured out OPM, other people's money, is how real estate's done, right? Aha moment. Were you watching a late night infomercial who's explained it all to you, or when was the aha moment?
No, that was definitely not the aha moment. So I went to, so as you know, I'm pretty involved in a lot of meetup groups and stuff like that. And, our common friend, Nick Tang, I probably want to attribute that to him.
Sure.
Who preaches that, use other people's money to do your deals. So I kind of learned that from him. I would say probably about 2.5 years ago. Okay. And so I got into his his meetups and stuff like that. Listen, but just by listening and not doing, it doesn't really sink in.
Right.
You think, I'm gonna save up this amount of money because I don't want to give up any of the equity, or I don't want to give, any of debt. Right. I don't want to pay that interest rate, right? Yeah. So that's how you so that's my thinking, because your parents kind of like ingrained that into you. Don't have debt. But he kind of changed the way I think about it.
Well,
it's okay.
yeah, debt's a tool, right? And
Right.
debt can be good and debt can be bad, right? So there's good debt and there's bad debt. Good debt is low interest debt or debt that you're using to make more money. It could be a hard money loan on a fix and flip that has a lot of equity and a large profit potential. It could be a long-term loan at a low interest rate on a cash flowing apartment building,
Right.
right? So now bad debt is credit card debt, student debt, these are debts you really don't want to have, but they're debts we all tend to have to build our businesses or live our life. And it's okay to have a comfortable amount of credit card debt or student debt. But that's not really taught in schools. I was an entrepreneur major, right? And I wasn't really taught the power of debt. Maybe we were taught, leverage is a tool, but they don't really break it down, in college. And, I came out of that just knowing what a franchise was, what a debit and a credit was. I learned calculus 2 for some reason. I learned statistics. I took all these, stupid core courses you have to take in college to, for some reason, get a business degree. And I couldn't tell you one thing about calculus. I can't speak any French. I went to French level 3. But, you're so right. You go out there, that's how you learn. You don't learn from a guru. You don't learn from a book. But I'm glad that Nick Tang, very smart man, check out his events if you haven't, listeners, pushed you to the point where you understood good debt and bad debt and then use debt as a tool to start flipping houses.
Yeah, for sure. So I started off right from college. I was a finance major. Mm-hmm. So I knew numbers. I was a Series 6 and Series 63. I had those licenses, so I did mutual funds, and I also, sold retirement accounts, IRAs, and all that kind of fun stuff, But even so, doing all that, I really didn't know anything about money or how to make money. That was the crazy thing. Like, I thought I knew, even though I was telling people, how to save. Hey, buy a VUL and, put your money in there so, you don't pay taxes on it. Right. Take a loan from it so you're not paying the taxes on it. So I was teaching people things like that. But like I said, I didn't know how to make the money. That was the crazy thing.
Yeah, well, it's funny how money works, how wealth works. We all pay so much money to go to college, right? You, a finance major, and me, an entrepreneur major, and coming out of college and saying the same exact thing. College doesn't teach you how to become wealthy. It teaches you how to work for someone, how to learn a craft. And there's nothing wrong with that. It teaches you how to show up on time and, work when no one's making you work. And then those are all important things. But I got to say, I did find that there's a huge gap in higher learning and then what the real world actually expects of you, and then when I got into real estate, or when I graduated college, I really had no idea what I wanted to do. And I was, my college advisor said, you should go get a job at this enterprise rent-a-car. And if you work hard enough, one day you can retire at age 65. And, they can start you there at $30,000 a year with benefits. It's a tough economy. It was 2009. Go do that. And I found it interesting that he's telling an entrepreneur major to go, work for another company in your entire life. And maybe one day you can retire at 65. And it depressed me. I was like, boy, that's why.
That's hilarious.
To me, I want to own my own business. And he's like, well, the economy's bad. It's not a good time to start a business. And I'll never forget that the worst advice you can ever get is from someone, who's not successful, right? I mean, in my opinion, this guy, he wasn't successful.
Right.
He didn't really know what he was talking about. And I just had some bureaucratic position at this university. And he gave me terrible advice, go get a job and work there for 40 years. And then you don't start a business in a down economy. The best time to start a business is when the economy is down. That's
right now.
Right now, during the corona, right now, get out there. There's so much opportunity. There's so much capital on the sidelines that people are looking to put to work. They just need to find the right operator, the right opportunity. Okay, well, I digress. So Anyway, so okay, you figured out that other people's money is the way that everyone does real estate, and that is the secret to fix and flipping mini houses. And then you went out and bought an ugly home?
I did. Yeah, I bought a bunch. We just went on a roll. We just kept buying. We bought a bunch. We were buying probably one or two a month.
Nice.
Our crews couldn't keep up, really. So we had to start subcontracting it out.
Wow.
For other crews, and then because also we couldn't keep up, we said, you know what? Let's also sell them. Let's wholesale them.
Sure.
Yeah. I mean, we went to, you saw me at the auctions back then.
Sure.
Right. Yeah. We started going to auctions, just to try to find more deals and stuff like that. And, and then we said, hey, these were actually bad deals, so let's wholesale them because, it needed so much work.
Right.
It was crazy. So So
I couldn't believe what people pay at the auctions. Like, right. It was good around 2015 to like 2017. I remember there was a year we made $1 million in wholesale fees. Like,
wow.
we would walk in there, and there was one day we bought a property, a 2-family in Belleville for $30,000. It just like wasn't on the list. No one knew about it. It just like popped up, and we were like, what is this? Looked it up on Zillow. We're like, it says 2-family. It says Belleville. Bid $30,000. Bought it.
Wow.
Wholesale the contract the next day for $130,000.
That's amazing.
So we made $100,000 wholesale fee. Really, those were the days. You could crush it.
That's a really good one because I bought. So I still own. I was there earlier today. We have a 2-family in Belleville, and I think we bought it like mid 2018, somewhere like around 2018. Yeah. And we paid about $190, including the wholesale fee. So imagine the gap, right?
Yeah.
From what you were talking about, 30,000,
right,
up to 190.
Yeah. And now you go to the auctions, right? And now you go to the auctions, and I mean, well, they're not going on right now, but towards the end of 2019 there and into 2020, they were really, we just kind of stopped going after a while because everyone's there. They really, so many rookies that just were overbidding, and you just know they're going to lose their shirt on these properties, or you see them pop up again because they don't bring in the other 80%. And that's what happens, right? You put down the 20%, and these investors realize, oops, I made a bad investment, and not put up the other 80%. And then 3 months later, it pops up at auction again. So we would see that a lot, but yeah, now it's very crowded. There's, but I am told that some of the auctions are opening up again. I know Warren County opened up, so that's interesting.
Really?
And
Okay.
there was like one property auctioned off there, so we'll see what comes of that going down the road. All right, so you were able to fix and flip properties. You had a number of properties going, and so you were making some money.
Yeah. We started making our own, we started making money. So what we did with the money was we bought some holds, we bought some properties, and we held the property, just
Excellent.
like that Belleville one.
Yeah. And so you have a nice portfolio today?
Not a huge portfolio. We have about 18 units, mostly 2-family, 3 families. Do
you find you're able to actually cash flow on the smaller multifamilies? Because I find it hard to cash flow on them sometimes.
We bought them at such good prices that we do cash flow. We still did a nice cash out refinance. Like, for example, towards the beginning of 2019, I bought a 3-family in North Newark, and I bought it for $120,000.
Oh, good price.
Yeah, for $120,000. I put in about $80,000 to fix it up. And I cash flow about almost $2,500 a month on it.
Wow, positive net cash flow?
Yes.
And you were able to refinance to get your entire initial investment back?
Correct. Yeah, I refinanced it. I took about $115,000 cash out refi.
On top of the investment?
On top of it, yeah.
Right.
On top of the cash flow.
Yeah, because a 3-family North Newark appraises at $400 these days, right?
Correct. Yes.
So, you put 80 into it, you bought it for 120, you got some holding costs, you're into for 215, something like that, and you're able to pull out. what, 290, 300,000, right?
Yeah, we filled I would say what, like 325 or something like that.
Wow. And you're still cash flow positive on it.
Oh yeah, absolutely.
Awesome.
Beautiful.
Awesome. It must have a lot of bedrooms to get that type of cash.
Yeah. That's correct. Yeah, the first floor has 5 bedrooms actually. So we combined the basement with the first floor. That's how we kind of did it.
Okay, so 2019 deals were tight. It sounds like you found a good one. Yeah. So, I don't want you to disclose necessarily your secret sauce, but it's so hard to find a good deal right now. Right. The auctions have closed up and they were dried up anyway. So where are you sourcing deals these days without giving away too much of your secret sauce?
Sure. No, we're doing some cold calling right now.
Okay.
So we have a VA that helps us cold call. Believe it or not, we find a lot of deals on Facebook.
Oh, wow. Facebook, really?
Yes, on Facebook. We're just a little more diligent than other people. So I kind of go after almost every deal.
Wow.
When somebody posts a deal that looks like garbage, I talk to them and I explore. And I see if there's still room in there, and then, I show them, hey, listen, I have this much in my account, I'm ready to close,
the thing about Facebook is I found that some of the people posting deals don't control the deal at all. They maybe just saw it on the internet and are reposting it. And they'll be like, hold on, let me get a hold of the guy I got it from, who gets a hold of the guy you got it from, who gets a hold of the guy you got it from. And by then you're paying $5,000 each person, and then one of them has like $100,000 fee. So I guess you're trying to figure out, get through the pork, get through the BS, and just
we kind of go swim through all that and get to the actual person.
Wow, interesting. Facebook. I'm a member of all those Facebook groups. I post in them, but I got to be honest, I never really looked through them. I got to say, I just post in them consistently. But I've tried to deal with a lot of Facebook. I've tried to sell deals on Facebook too, like wholesale out properties, but I just find so many tire kickers on.
There definitely is a lot of tire kickers. You just have to know who is, after you deal with them 1 or 2 times, that's all they are.
Yeah.
They want to explore every deal. And so you kind of understand like who's actually doing deals, the guys that are posting like, hey, I just finished a flip, I just sold this property. Those are the real guys,
right?
The ones that never actually post anything, they're not real.
Yeah. So, that's great advice, right? Look for the guys that are actually posting the stuff they're doing,
Yeah.
And exactly, that's really what it's all about, and there's a lot of people just out there that are going to waste your time. But if you can weed through the BS, weed through the noise, that's where you find your best deals. Right?
Yeah. I mean, so last December 2019, we sold this deal. It was a deal in Union, New Jersey. Again, we bought it for 120. We put about another 120 into it. This was a hoarder house.
Wow.
And we put about 120 into it. We sold it for I want to say like 387. So we did pretty well with that deal. Yeah. And again, that was a deal on Facebook.
Right.
The owner actually posted it on Facebook, and there was probably about 30 people that responded to that post.
Wow.
But the thing was, we kept following up.
Right.
We kept following up.
Yeah.
And we ended up eventually taking the owner to lunch. We explained to them, hey, listen, we can close on this deal. We actually care about you. So he ended up getting us the deal. And,
wow.
Like I said, yeah.
So you really go above and beyond to find these deals,
Yeah. I mean, we're not doing like super high volume. We're not doing like 10, 20 deals a month. So, not that we have a lot of time to waste, but, we actually follow up. We actually,
Well, it's about quality over quantity, right? Because I found in this business, you can do a lot and make small margins, or you can do less and make large margins. Right?
Yeah, right. That's why you went into the apartment syndication space. right?
Right, exactly. The idea is that, with apartment building syndications too, like, you could do one big deal and do well with it, and
Right.
if we're buying $3 million buildings or so, if we just buy 2 to 4 a year, we hit our goal. Where with flipping houses, boy, you got to find a new one every 2 weeks, and
Yeah.
so it's we're flipping less now. We still have a good flip going on right now. We just finished it. It was under contract. It fell out of contract. We're like, oh shucks, and then we got 3 offers, like $30,000 above list price. So we were like, all right, blessing in disguise. So the market is so hot right now, and we have about 6 other properties where we're flipping, but we do a lot of like prehabs right now. So we're not even necessarily renovating them completely. Like some we do a little bit of work on, others we will renovate, but like 4 out of 5 properties, we're really just prehabbing a little bit and selling to other investors, which for our listeners, that means you're really not renovating it. Like Joey's, gut renovating some of these properties. He's putting in all the whistles and bells. He's got to pass a home inspection, an FHA appraisal. You got to pass all these things. It's got to hit all the marks. We actually like just getting it at a good price, cleaning it up, cleaning it out, and then selling it maybe to someone like Joey who's going to go take the extra step. And so that can work too. Have you ever done that before?
Yeah. Oh yeah, we've done a few. We actually in June we actually sold. So we sold 5 properties in June, and 3 of the 5 were that.
Sure. That's a good number for June. June was a tough month this year,
Yeah, I mean, it was a good month for me,
Good, man. Good. Yeah. Things are coming back around on our side too. We definitely had a big pause in closings and acquisitions and fundraising for a few months there, but things are really picking up nicely now. Rent collection stayed strong through those times as well. So that's nice for the holdings end. But finally, the market's kind of hot again, and right, it's crazy on the buy side. That's finding deals the hardest part of our job, right?
Yeah, it's tough right now. A lot of the homeowners we talk to, they think that just because the rest of the market is hot and their house is gonna sell for just as much, even though it needs a ton of work. So
yeah, I was looking at a property today, and the guy was like, "Yeah, 160." I'm like, "No, it needs 160 work. There's no way we can pay this." The ARV was in like the mid 2s, and he's like, "Buy it for 160, put 160 into it, sell it in the mid 2s. You get your money back. What's wrong with that?"
Well, we don't know how to do math here. That's what's wrong.
I love when realtors tell you like how to flip houses and they've never flipped a house before. It's just like, no, it's a good deal because I said so. So anyway, and it's that's sometimes what you run into out there. So Joey, this has been great here. Let's wrap up. So how can people contact you to learn more about what you're doing, and what are you looking for?
Yeah, definitely. Again, I'm reachable on Facebook, on Instagram. Joey Chan on Facebook. Instagram is NJ House, numerical 4 cash. Those are the 2 places I'm at most often. And, we're looking for people that want to get involved in fix and flips and smaller deals, not the large syndication space where they kind of get their money locked up for a few years, So people that want to, do some passive investing as well. Not trying to steal your people, but
oh no problem. That's why you're on here.
People that want to partner up, whether they want to take a large equity position or just a debt position, where they can just kind of learn from us as well.
Sure. Great. Excellent. All right. Well, email me that link. I'll put it in the show notes. And
absolutely.
Thanks a lot for joining us here. And thank you, our listeners, for listening in to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito, and you can learn more about People's Capital Group at peoplescapitalgroup.com. We buy apartment buildings. We have short-term rentals that we're raising capital for right now. It's actually fully funded, very hot part of our business. And we are buying a building every 3 to 6 months here in North Jersey, managing it with our in-house management company, and always looking to team up with new investors and add them to our pool of investors. We've been doing this about 10 years. So if you want to learn more about how you can participate as a passive investor with People's Capital Group, go to peoplescapitalgroup.com. And be sure to subscribe to our podcast here. Listen to more episodes. We come out with an episode every single week. Thank you so much, Joey Chan. Be sure to send me that information. I'll put it in the show notes, and we'll catch up soon, my friend.
Absolutely. Thank you. Good seeing you.